much. We'll see you later. And now Tim Bigham is here, option strategist at Buy Alerts, taking a look at an example trade for Oracle, which I mentioned has an incredible run. It's up 90% in 3 months. Where do you go from here?
Yeah, I think you go nowhere from here, Nicole, on this stock. I think certainly the highs around that 250 area may be in certainly before earnings, which come towards the end of August for Oracle. So I think the stock probably has run out of some steam, and I think the overall market has as well here, even though we get into earnings season. So I'm just positioning to play for more kind of consolidation in Oracle here. IV has picked up recently. We're at the 41% level, so certainly option selling very viable with option prices picking up here. So I'm staying a little bit away from earnings, going out to kind of the traditional August 15th expiration, doing an iron condor trade again, selling an out of the money call spread, the 260, 262 and a half above the all-time high on Oracle, and then to the downside, the 225, 222 and a half. When I put the trade on this morning, getting about 85 cents still there, and plenty of cushion on either side here. So I think the stock probably has gotten a little overdone, certainly from a valuation perspective, looking at almost 12 times price to sales, by far the highest ever, 60 times PE as well, basically the highest ever. Also technically kind of getting overdone here. So I think Oracle and the market overall probably needs at least some sideways price action here, or even a slight pullback before it even heads higher here. So I'm just taking advantage of inflated IV, staying short of earnings to position for more sideways consolidation, basically trying to make money for nothing on Oracle. And I like the risk return, risking about $1.65 to make 85 cents, so over a 50% return on risk.
Okay, well, thank you for painting that picture. We appreciate it. How do you feel about the market? I mean, if you think Oracle may not be going too far too fast at this moment, the market is also at record highs as of yesterday's close. Now what?
Yeah, exactly. And I think that's the biggest question here. I think the end of the month will be key here. We get some of the big mega cap tech earnings, certainly Microsoft and Apple. More Microsoft, which I think is kind of the poster child for all things AI now, getting the Fed, meeting at the end of the month here. Tariffs also basically coming either to fruition or not at the end of the month. Seasonality for stocks really starting to turn a little bit more bearish here from the best bullish period over the past couple decades. So I'm guardedly bearish on stocks going forward. Valuations at the highest levels ever. Not too many people mentioning valuations. I'm kind of an old-fashioned guy and still believe that valuations ultimately do matter. You're looking at the S&P trading at over 3 times price to sales. Only done that twice in history, which both were right before big, meaningful pullbacks in stocks.
Okay, good to see you, Tim Bigham. We like your style. We're glad you bring us all different perspectives. We appreciate it. Option strategist, Buy Alerts. Tim, thank you. Always.